Thank you.
Bill Brandt, development specialist and CEO, joins us now on the economic impact of the devastation. Bill, thank you for joining us here. You've seen, I'm sure, the video that many of us have across here, the country and around the world. What is the likelihood that retailers like CVS, Rite Aid, and mom and pop stores in an already depressed area will reinvest and rebuild?
Julian, I think that, you have to split the categories a bit. I think that the CVSs and the Rite Aids, clearly, it's a corporate decision, and it relates to exposure. They certainly have the capital to invest if they want to. My suspicion is they will wait a while to see how things develop and what kind of incentives Maryland might offer. I think it's a lot different with the moms and pops. Many of them may be underinsured, and it may spell the death knell for a lot of the small greengrocers in that part of Baltimore.
Yeah, that's quite unfortunate, Bill. You're saying, from what I understand, that it may take 3 to 5 years to rebuild from this devastation.
If you look back at the history of these kind of occurrences in other cities, Los Angeles being the most recent, it does take 3 to 5 years, and obviously that's assuming that some kind of disaster relief is available, low-interest loans and the rest of it from the government. If that's not available here, or if government aid isn't forthcoming from the state or the federal government, it could take longer.
And this pales in comparison, thank God, to what happened, of course, in L.A. in 1992. We're talking about over $1 billion in damages and about $4 billion in, I think, a revenue sales tax. This doesn't have quite the same effect, but I guess Baltimore obviously is a different city with different challenges.
Yeah, I think there's a scale issue. I am the first one would agree, Julian, that it doesn't have the same sort of proportionality. On the other hand, for Baltimore, a much smaller city, a much more compact city, this is pretty devastating. And if you're a corporate officer at one of these major retailers looking to expand into the Baltimore area, this is going to give you pause for a while until you see if their house is in order.
And here's the thing also, outside of the businesses there, the people who live and predominantly the West Baltimore area, where are they going to shop? How are they going to get their goods and services while there's so much devastation over there?
You know, Julian, we've had a national debate on what I call food deserts, I should say, and what you do as well. Obviously, you're taking a group of folks who need these establishments and need them in their neighborhood. The CVS store was apparently a recent acquisition and a recent build, making life easier for a lot of folks. And now you put them back on the road, some of them on public transportation, to get some of the necessities of life. It's not a good outcome, and I suspect there won't be any relief from it for a while to come after this.
Real quickly, mom and pop stores, I think they bear the brunt of all of this. They have less in terms of insurance, I would assume, in order to recoup and start all over again.
I think that's absolutely right. The other problem is that I think many of the moms and pops had their life savings tied up in this. Some of them own the buildings, some of them are simply renters. All of that will have to be sorted out, but without easy access to financial aid or low-interest loans, I think the probability of a lot of the small folks opening up in the near future and coming right back is questionable. I would suspect over the next couple of years, small merchants will come into town where there are opportunities, but it will be a delay, it'll be on a slow track, and it will, on a long-term basis, hurt the neighborhood and its population.
Right, always a challenge for smaller businesses. Bill Brandt, thank you for your insight, sir.
Always a pleasure, Julian.
Okay, the market's holding steady to gains made by corporate earnings. Here's a look at the final numbers. The Dow closing at 18,1010, and the S&P 500 closing at 2,014, and the NASDAQ ended the day at 5,055. The top stocks for watch today as corporate earnings season continues. The nation's second largest automaker reported earnings falling short of expectations. Revenue fell to $31.8 billion from $33.9 billion a year ago. Ford closing at $16.06. United Parcel Service posted quarterly earnings that rose 14% to $1.3 billion and revenue that also increased to $13.98 billion. The company says new pricing initiatives and strong domestic growth helped to boost sales. UPS closing at $100.77. And shares of luxury fashion retailer Coach were crushed in earlier trading. This after the company reported shares that missed expectations and announced store closings. The company reported sales of $929.3 million, below the estimate of $950.6 million. Coach closing at $39.65. Now for a look at commodities. Gold closing at $1,210.90 an ounce, and oil closing at $57.01 per barrel, a little bit up there. And in some other important economic data released today, more signs the housing market is continuing to strengthen, and that's good news. Home prices in 20 U.S. cities climbed at a faster pace than forecasted. The S&P Case-Shiller index of property values increased 5% from February 2014, the biggest year-to-year gain since August. And consumer confidence took a hit this month. The Conference Board's Consumer Confidence Index hit 95.2 in April, missing estimates. This reading marks the lowest level since December. Well, coming up, all eyes on the Fed and interest rates, what Janet Yellen could have in store when a rise Xchange returns. Stay with us.